Where I always start, what questions do you guys have? On the homework, on the project, anything in general? Any questions about last week? Yes, ma'am.
I was wondering, I was looking at the McGraw-Hill Connect.
Yes.
I was wondering, is there like a way we could use that, the Student Study Center and the self-quizzing?
You can use it, but they charge for it. Yeah.
I thought maybe like use the
No. They come in and they try and get us to use it all the time so we don't have to grade homework and stuff so that they can sell you more. And I think the cost of the book is enough.
Yeah.
Yeah.
I haven't gone Amazon, but $80.
Well, and the predecessor to it was, I forget what it was called, but the homework was pull down these drop-down menus and there'd be like 3 choices and you could just sit there and try them until you got the right answer. And I figured out real quick, students weren't learning from that, they were just guessing.
Yeah.
This is supposedly better, but I haven't tried it, and I'm not a big fan of spending an extra $50, so if you want to, feel free. Okay? Who is next?
Is the $50,000 we're given for buying stocks in total for the entire project, or is it just?
It's imaginary money, yes.
Yeah.
Okay.
That was imaginary.
No, what do you mean in total? You're going to spend $50,000 on one of the 2 companies or some of both.
Okay, so this is for the entirety of the project, like in case, are we just buying stocks now, or are we going to be buying?
Right. So what you're going to do is, I want you to go out there and look up your 2 companies. Say you've got company A and company B. And company A trades for $10 today. And company B trades for $20. So we opted to buy company A. So you could go out and buy 5,000 shares. Okay? You could have bought 2,500 shares of company B, but we didn't. And all of a sudden you have your benchmark. So by the time the class is done, what we want to see is company A stock go to $15 a share, and company B, maybe it's 21 or something, but this one performed better so that you make more money here. That's hopefully what happens. Okay? Cool. Other questions? Yes, sir.
Do we buy shares now and then buy shares later if we see that the price drop down?
No, you're going to spend the whole 50 now. Okay? You're going to be fully invested the entire semester. Okay? Other questions? Has everybody picked their group? Everybody's gotten their groups together? Yes? Everybody picked their companies? Okay, because tonight I want you guys to turn in a list of who's in your group, what your 2 companies are, what it's trading at, and how many shares you bought. Okay? Somebody brought up, this is old news. This has been going on for a while. 2 of the companies, one of them was Pete's Coffee and the other one's Green Mountain. Pete's was going to sell and then wasn't going to sell and was going to sell and wasn't going to sell. And it fell apart there, so I left them on the list. But apparently it sold, so all the data is gone. You can't get any information on them. Somebody asked if they could replace Pete's with Starbucks. I said, go for it. Okay, so if you want to deal with the coffee world, it's going to be Green Mountain Coffee Roasters and Starbucks. Okay? Good enough? Other questions? None? Okay. So, questions on the homework? All right, let's start with the homework then. Let's do a few just so we get used to it, okay? So, for tonight, the homework assignment was exercise 1-1, 1-3, 1-4, and 1-10. I believe they start on page 30 in the book. Who'd like to tackle 1-1 for us? Exercise 1-1. You're up. Go right ahead.
Things.
Yeah, go ahead. let's see, in general, what's going on here? Match the definition with the abbreviation. So the first one's SEC. What's the answer?
I kind of did it out of order, just put like all the letters, so I'll just go through. SEC is Securities and Exchange Commission.
And which answer is that? That's K, right? For those of you who didn't write down the full description.
It's J in our book.
Oh, yeah, okay.
Okay. Which edition do you have?
I have the new one.
You have the new one. I have 7. How many of you have the new one, version 8? Okay. How many of you have 7? Everybody else. Okay. So forget what letter it is. It's the Securities and Exchange Commission.
Okay, and
Audit.
audit, which is, I believe that's F, which is an examination of financial reports to ensure that they represent what they claim and conform with generally accepted accounting principles.
Yes, but it's not even F in my book. So an audit is an examination of financial reports to ensure that they conform with GAAP, which is G. Good.
Number 3,
Sole proprietorship.
is H, which is an unincorporated business owned by one person.
An unincorporated business owned by one person. Can everybody hear her? Yeah? Then I won't keep repeating it. Sorry. Go ahead.
Number 4 is L, which is a company with stock that can be bought and sold by investors on established stock exchanges.
That's a corporation. Yes.
Number 5, which is accounting, and that is a system that collects and processes financial information about an organization and reports that information to decision makers.
Good.
Number 6, account entity, which is D, the organization for which financial data are to be collected and, in parentheses, separate and distinct from its owners.
Okay.
Number 7, audit report, which is I, a report that describes the auditor's opinion of the fairness of the financial statement presentation and the evidence gathered to support that opinion.
Okay. Anybody have questions on these as we go through them? I know we're just kind of chugging through them, but if you have a question, just let us know. We can discuss if you have a different opinion or a question about it, okay?
Number 8 is E, which is publicly traded, and that is an incorporated entity that issues shares of stock as evidence of ownership. Number 9, which is C, an unincorporated business owned by 2 or more persons.
Partnership, yes.
10, which is K, Financial Accounting Standards Board, which is FASB.
FASB.
11, which is G, Certified Public Accountant, which is CPA. 12, which is the unit of measurement of information about an entity in terms of the dollar amount or other national monetary unit. And last one, 13, is M, General Accepted Accounting Principles, which is GA.
Excellent. Questions, any of those? Everybody's good with that? Okay, just lots of definitions at this point. We'll do that later. Who wants to tackle 1.3? Anybody? Who doesn't want to tackle 1.3? Smart enough to know not to raise your hand. I love it.
Okay.
Okay.
So, 1, I have notes payable to bank as a liability on the balance sheet.
Correct.
General administrative, I have as an expense on the income statement.
Okay, everybody understands we're just categorizing these and talking about where they go. Income statement, balance sheet, and so on. Go ahead, you're doing great.
Accounts payable, liability on the balance sheet.
Yes.
Dividends payable, liability on the balance sheet. Retained earnings, stockholder equity on the balance sheet.
Everybody understand that one? You can't hear? Okay, retained earnings is stockholders' equity, and it goes on the balance sheet. Everybody's good with that? Okay.
Cash and cash.
Hang on. What?
I didn't hear the second one.
The second one was general and administrative, and those are a category of expenses on the income statement.
Thank you.
Okay, we're down to accounts receivable.
Cash equivalents. Cash and cash equivalents.
Oh, cash and cash equivalents, my fault.
Asset on the balance sheet.
Cash and, yes, they are, right? Cash is good. We like having cash. It's an asset. Does everyone understand why it goes on the balance sheet? Do we want to touch on that real quick? Okay. What's the basic accounting equation? Okay. Different class. We'll do it the right way. There we go. Okay. Assets are the things that you own. If you have cash, is that an asset? You can use it to do things with. Pay bills, buy stuff, right? If you owe somebody money, that's a liability. That's a bad thing. You've got to use up your cash to pay it later, right? Okay. Good and bad are relative terms, but, to get the basic concept across. Good? Okay. And retained earnings is part of stockholders' equity. All of these things make up your balance sheet. Did we go through and make a balance sheet last time?
We made a basic balance sheet.
Okay. I forget because at the beginning, like I said, in this class we cover all of Accounting 151 in about 3 weeks. So I'm doing both right now, and I forget which one I covered what in. Please, go ahead.
Accounts receivable, asset on the balance sheet.
Yes.
Provision for income tax. Asset on the balance sheet, I said.
Provision for income taxes. Tax is something that you have to do what? Pay.
So it's a liability.
It's going to go in the liabilities column. Okay.
Cost of goods sold, expense on the income statement.
Yes.
Machinery and
Everybody's good with that? Cost of goods sold. It's what you paid for the books you put on the shelf that you're going to try and sell, right? Okay. Yes.
Just got the income tax one, because the little note in the book said that provision for income taxes is used as a synonym for income tax expense. So is it
Okay. If I make a provision for income tax, you're recording the expense, but the provision is think about this. For last year, 2013, we all have to file a tax return, right? Some of you maybe not. But if you get to April, you file the return and you owe money, you pay it in April, but you're paying for taxes from 2013. Okay? So what we're doing at the end of an accounting period is we're recording the expense as a debit. This goes in the income statement because it's an expense. If I spell it completely, we'll be better off. And then you have a provision for taxes payable for the other $1,000, and that's your credit. We haven't talked about debits and credits, but we will tonight. Okay? Just to give you a summary. Assets are typically debits. Liabilities are typically credits. So the fact that this went here makes it either an expense or an asset. And the fact that the provision for taxes payable went in the credit column makes it a liability. We'll get there tonight. I'm kind of jumping ahead, sorry. Questions, anybody? Are we going to sit and stare at me blankly all night? Yes? No, we're going to liven up and we're going to have fun. Yes? Okay, good. Please go ahead.
I have cost of goods sold as an expense on the income statement.
Yes.
I think I said that. Machinery and equipment, an asset on the balance sheet.
Yes. Right? That's something we own that we're going to use.
Net sales, revenue on the income statement.
Sales and revenue, they're synonyms, pretty much, yes. Good.
Inventory, an asset on the balance sheet.
Inventory is an asset on the balance sheet, right? Inventory, we bought a bunch of books, we brought them in, we put them on our store shelf. They have value, we're going to sell them, so they are an asset.
Marketing, selling, and advertising, an expense on the income statement.
Okay, so marketing is typically an expense. Could it be an asset? Do we have marketing as an asset? Not really. You could prepay some advertising, but that's different. Selling is an expense. It's not a sale. So yeah, they're expenses on the income statement.
Building, asset on the balance sheet.
Anybody disagree with that? We own a building. It's an asset.
And land, the same thing, an asset on the balance
Land is also an asset, yes.
Income tax payable, an expense on the income statement.
Okay. Income tax payable, because it's a payable, implies we haven't paid it yet. So it goes, we're back in the liability category again.
So the provision one should be the expense, right?
They're not real clear about it, are they?
But that's what I was saying. I mean, the note at the bottom says, in the U.S., provision for income taxes is most often used as a synonym for income tax expense.
Okay.
So they're using
Well,
this.
using that, because I'm not looking at the book, but using that, yes, then that's your expense. But the key words are expense and payable. So if you have an expense, you know it's an expense. If you have a payable, by definition, that's a liability. Does that clarify it? Yes, no, maybe? You made eye contact. You got to answer. Okay.
Distribution and warehouse costs, an expense on the income statement.
Costs is the key word. Cost is a synonym for expense. Yes? Okay.
Investment in other companies, asset on the balance sheet.
Just like you guys are buying stocks, fictional stocks in the companies you're selecting, those are an asset, right? You could sell them and turn them into cash right away. So those are assets. Good. Questions on any of those? This is pretty straightforward for everybody, I hope. All right. Let's see if 110 is anything exciting. Oh yeah, 110 is exciting.
You skipped 1 4, was that on purpose?
I'm sorry, what?
You skipped 1 4, was that on purpose?
I don't know. Maybe because I didn't read the thing properly. 1.4, preparing a balance sheet. So they give you a bunch of accounts and they say, create a balance sheet, correct? Mm-hmm. Okay, who'd like to tackle that?
Are we ready?
Come on down.
Okay.
So this is going to happen pretty quickly, but I'm going to show you how to leverage the assets you have in the room. Okay? So all you need to remember is, what's the format for a balance sheet? We did one the other night, right?
That?
Okay. Well, you would spend all your time staring at that and writing it up here.
I would.
We're going to leverage the assets in the room. This is how you get through making a presentation, by the way.
Okay. You
Okay.
want to walk me through it?
Absolutely.
Cool.
How about, tell you what, I'll let you do the next problem. I'll do this one. No, she wants to do this. All right, so let me ask you. What's the first thing that goes on a balance sheet?
It's going to be the title of the company.
Title.
And then
And the
what
title,
the statement is. Oh, so
who,
Honda Motor Corporation of Japan.
what. So the name of the company's Honda Motor. We're not writing it up here. I'm doing it this way so you remember it. What is the balance sheet? This is a balance sheet. And the when. When are we doing this? What's the date of the statement?
March 31st.
Okay. So, after you get through the title, the next thing is, now you need that. What's the first thing that goes on the balance sheet?
Assets.
Assets. Excellent.
Yeah. All right.
Okay. So, here's where you turn around and go, okay, you guys have the book. Tell me, what are the assets? What assets do we have?
So what do we have for assets? First cash.
Cash. Go ahead, write it up there.
And also cash equivalents, right? You want me to write the whole
You can
thing?
just write up cash.
Okay.
You're writing on the board, you can't abbreviate. It's the only place and time.
All right.
So go, okay, how much cash do we have?
1,279.
Well, let's see, which book are we? 690 yen.
The books are different.
This is in billings of yen, too.
They're in yen. Which version are you using?
7.
Who has the 7th edition? Okay, how much cash do we have? 690. We saved 200 and something bucks, but we got to find out which version we're talking about.
All right, so what's our next asset?
What's the next asset?
Contributed capital.
Is that an asset or is that another part of the balance sheet?
Inventories?
Hang on. That's part of stockholders' equity. It does go on the balance sheet, but it goes in stockholders' equity. So we'll come back to that, okay?
They put everything in alphabetical order.
That's good. I want you to have to go through and pick them out. So inventory was the next one I heard. So go ahead.
Okay. And how much of inventory?
1,244.
1,244?
And have different paper also.
Okay.
Investment fee.
We have investments. Does it clarify at all? It just says investments, right? Okay. So investments.
639.
Billion yen.
All right.
Okay. What's next?
Net property, plant, and equipment.
Property, plant, and equipment. You may abbreviate PP and E.
PP&E. This is so much easier. Okay, and how much for that?
2,148.
A little louder.
2,148.
2,148. Any questions so far? We're just going through and identifying the things that are assets at this point. What's the next one?
Other assets. Other.
What about trade accounts, notes, and other receivables?
You've got accounts receivable, right? Trade receivables? Okay. We didn't talk about what order they go in yet, and I'll do that here in a moment. So go ahead and put whatever they tell you, go with it.
So, other assets. How much in other assets?
6244.
6244.
Okay. And the next one?
What was?
Trade accounts, notes, and other receivables.
So we had accounts receivable, or trade receivables.
Trade receivable?
Sure.
And how much for that?
854.
Do we have any more assets?
Okay. So what's the next thing we would do here?
We would do total assets.
Total assets, and we total it up. Somebody do the math for us, please. Who does it for me?
Actually wrote it.
The book wrote down what total assets are?
Yeah.
How much is it?
11,819.
11,819. Oh, they did. I see what they're doing. Okay. Okay. What's the next part of our balance sheet?
Liabilities.
Liabilities. Go ahead and put up a header for that.
Okay.
You may as well work side by side. Yeah, we have room.
Okay. What do we have for liabilities?
Accounts payable.
You may abbreviate AP.
And how much for accounts payable?
4,237.
All right. And the next one?
Long-term debt.
Long-term debt.
Long-term.
Okay. LT will be fine, but go ahead. Yeah. When you write on the board, it takes time. It just does. How much long-term debt do we have? What? Go ahead.
I just was going on the next one. I
Oh.
have the same numbers.
Well, how many billions of yen do we have here?
1933.
1933. Okay. What was the next one?
Other liabilities.
Other liabilities. How much do we have?
1519.
1,519. Other liabilities, anything else? Okay. So next step is total liabilities. Oh. Go ahead.
I was thinking, it's like, wait, should we wait to total them until we get stockholders' equity too? But then that's like,
Nope.
you total those two together.
Correct. That'll come in a minute. So somebody do the math for us. How much total liabilities do we have?
$7,689.
Yeah.
Yen.
Yes. Sorry.
Billion yen.
Billion.
That's right.
Okay. Okay, what's next? So, I'm going to guide you a little bit here. What's next on the balance sheet?
Stockholders' equity.
Stockholders' equity. So normally when you do a balance sheet, it's assets on one side, liabilities on the other, owner's equity below it, or they all go just straight down. So put owner's equity or shareholders' equity here as a title, okay?
Okay.
And you can go EQ for equity.
Okay.
We're going to save some time.
Yeah, let's do that.
All right. What are the components of stockholders' equity? What do we have?
Common stock.
Common stock.
Okay.
What did you write?
I put contributed capital.
Yeah, that's what I have in the book.
Yeah.
Oh, so that's common stock or contributed?
Yes. And what do we have for contributed capital / common stock?
259.
259 billion yen. Okay, what's the next element?
Retained earnings.
Retained earnings. RE. Don't get your gloves dirty.
That's okay, I'll wash it. Thank you.
How much retained earnings do we have?
3,871.
3,871. Everyone agree? Everybody got quiet there, like there was disagreement in the group. Okay, do we have any other components that go in stockholders' equity? What? No?
Not for this problem.
Okay, so at this point, our next step is to total stockholders' equity.
Okay.
And did anyone do the math?
It's 4130.
Good enough, 4130.
Okay.
Okay, there's one more line. What is it?
Total liabilities and stockholders' equity.
Correct.
Okay.
So at this point, we're going to grab liabilities and stockholders' equity and add them together. This one and this one. And what is that total?
11,819.
Okay. We double underline stuff, yes.
I was all excited about
Okay.
it.
So let's walk through this here a little bit and show you a few things. This is excellent. She did good, right? Okay. Thank you very much. So add your liabilities and your stockholders' equity. You get total liabilities and stockholders' equity. Notice that your total liabilities and stockholders' equity equals total assets. I erased it. So that your basic accounting equation is in balance, right? If it's ever not, you have a problem that we have to figure out where we made a mistake. So, given that this equals this plus this, we have a rule here, right? A rule we can follow. If I don't know what this is, but I know what total assets and total stockholders' equity is, can I figure this out?
Yep.
I can do the math, right? And back into it. Piece of cake. Everybody good with that? So as long as you're only missing one of them, you can figure it out. Some of the homework, and I don't know if it's this week or later, will have, it'll be missing this and give you everything else until you find this. And you can do it because you can do the math, figure this, and back into the rest of it, right? Okay. So just so you see the relationships on how this all comes together. Now, the other thing we talked about, or someone brought up, this is a simple balance sheet. Later on, we're going to move to, and you will see these in your companies, your sample companies, what's called a classified balance sheet. And a classified balance sheet breaks things out in terms of current and long-term. Okay? So in terms of assets, what that means is, what are my current assets and what are my long-term assets? The golden rule is cash is king. So a current asset is something that is cash or will turn into cash in the current accounting cycle. We typically in this class are looking at a calendar year, or not a calendar year, a fiscal year. So it's a 12-month period, right? So if I have cash, by definition, that's cash. So it's current. It's always listed first under current assets. What's the next thing that typically turns into cash? Trade receivables, because we're giving people 30-day terms. So every 30 days, this turns into cash. So this is typically listed second up here. Then what? What becomes cash next? Well, it could be inventory. It could be the investment. We don't know from what we're told in this problem. If we know that we're going to sell the investment pretty soon, that could be the next one. Okay, I'm going to sell the investment sometime this month. Inventory, you've got to sell it, and then it becomes a receivable, which takes 30 days to turn into cash. So there's your benchmark. Inventory is going to be 30, 45, 60 days before it becomes cash. So let's just say the inventory will become cash third. And maybe your investment, we're not going to sell this. We plan on hanging on to this for a couple of years. By definition, what is it? Long term. So it would go down in its own section. So our assets would have assets, current assets, and then you'd list cash, inventory, AR, total, current. Okay? Then you typically go property, plant, and equipment. Those are the assets that you've bought to run the company with. You know, machinery, buildings. Are you going to sell those in the near future? No. So they get their own category. PP&E. Okay. Then you get what's called long-term or other assets. And down there is where you'd have your investment and whatever else you have. So then you take the three totals from total current, total PP&E, and total other, and you would have total assets. And again, that's what's called a classified balance sheet. Everybody follow me? Sort of? You just break them down. So if I were reading this and if I'm looking at this going, okay, cash, inventory, receivables, let's say we do have that investment down here. Let's say we have stock as an investment down here. By putting it forth, what am I telling everyone? I have stock. I don't plan on hanging on to it very long, but I'm going to hang on to it longer than my inventory and my receivable. So it probably won't turn into cash for another 60 days or more. But less than 360, right? And when we talk about notes receivable later on, or notes payable, sometimes you'll see a notes payable in here right up next to cash, or notes receivable right next to cash. And all that's telling you is, hey, this is due in a couple of days. We're going to receive that pretty soon. So you get information just by where things are placed, as long as you know these conventions on presentation. Good? On the liability side, you have the same thing. You have current liabilities and long-term liabilities. So long-term debt would go down at the bottom. Accounts payable, you got to pay that in 30 days. It would go right at the top. So you rank these things based on how soon you need cash to pay for them. So the ones you have to liquidate first go to the top. Then you work your way down. So this would be AP, probably other liabilities. We don't know what it is, but they're probably not long-term. And this long-term debt would go in its own section down below called long-term debt. Good? And you'll see these as you look at examples of financials.
So that's true with all balance sheets, not just classified balance sheets?
That's what a classified balance sheet is breaking them down into current and long-term.
Into current and long-term, but on a normal balance sheet, like the one we just put together, or a non-classified balance sheet, would they still be put in order of
Yes.
when you're, in order of liquidity or when you're expected to pay them?
We'd put them in cash as king order.
Okay.
Okay? But you wouldn't break them out as current and long-term, and yes. But they'd still be presented in the same order, just without the groupings.
Sure.
Okay? You don't normally see them without the groupings. Everybody does classified.
Oh, okay.
Unless it's a small company. So you will see them. Okay? Out in the real world you see it, but not very often. All right, other questions? Cool. Everybody feeling good about the homework? Yes? Do we want to waste any more time on it? Would we like to spend any more time on it? Am I boring you all to tears?
Let's move on.
Let's move on. We do have a problem, PR 1-2. Let me just look at it real quick. Let's just do the problem. Let's skip to problem 1-2. We'll do it real quick and we'll move on. Good? What?
I thought we were doing problem 1-1.
My homework sheet says PR 1-2.
That's what mine said.
And 1-1 is another balance sheet. So let's do an income statement. That's why I'm hip on this idea. All right, so I'm just going to read this one out loud. During the summer between her junior and senior year, Bridget Lewis needed to earn sufficient money for the coming academic year. Unable to obtain a summer job with a reasonable salary, she decided to open a lawn care business for 3 months. She bought a used pickup truck for $1,500. She painted her name and phone number on the door. She spent $900 for mowers, trimmers, and tools. She borrowed $2,500 in cash by signing a promissory note, so she's obligated to pay interest. At the end of the summer, she did a lot of work. She had money in the bank. Let's see. She had bank deposits that totaled $12,300. She had written checks for gas for $940, repairs to the truck for $250, mower repair for $110, other supplies $80, people that worked for her $5,400, some payroll taxes, insurance, telephone, and she paid off the debt. Customers still owed her $700, so she let people pay her later. And she owes $180 for gas because she has a credit card or something. All right, so what do we have here? We got a ton of information, but we have enough information to calculate what? We could do a balance sheet. We could do an income statement for this. It's all there. Does everybody agree with me?
Yes.
Anybody disagree? It's safe to say no. So let's play around with this a little bit. Let's create the income statement for this and just piece it together and see if she really made money. You know, this is fairly typical of how small business owners think. Oh, I have more money in my bank account. I must be okay. I must have made money. Well, did she? Let's find out. Fair enough? Okay. So we'll do let's do the income statement first, because you always prepare the income statement first. Income statement always starts with a header. Who, what, and when. We can fill that all in, but it doesn't really matter. It's just a homework problem, right? Yes?
In the book they kept putting the unit of measure. Do you want us to do that?
You will see unit of measure. I mean, we're talking hundreds of dollars here. So I don't need a units of measure. If we were talking billions of yen, yes, I'd want to identify it as billions of yen or billions of dollars with how many zeros are omitted. But for this, no units. Okay? So on an income statement, what's first? Revenue. So how much revenue does this landscaping business have? There's a couple of things to look at here. It tells us that she made bank deposits from customers for $12,300. Good? Is that all the revenue she's got? No. What else does she have? Down below it says customers owe her another $700, right? So we have to add those two together to figure out what her total revenue was. So that's, what was the first number? It's 13,000? Okay.
Just go on your balance sheet as a current asset.
Hang on. My total revenue is the $12,300 plus 700 is $13,000. Sean, what was your question?
So that 700 wouldn't just go on balance sheet as current assets?
Yes, it does, but we'll do the balance sheet in a minute.
Okay, but it still doesn't mean.
Well, okay, let's do the balance sheet. Again, we've got a who, what, and when. What and when. For the balance sheet, we've got assets. Okay, and she's got accounts receivable of $700. So the $700 goes over here. But it also gets added to the $12,300 in cash she deposited in her bank account. Because that's the total revenue she generated. Good? Okay, do we have any other revenue? Okay, I only have one revenue item. I don't need a subtotal. What is the next grouping on an income statement? Expenses, yes? And let's go through, list off the expenses for me. Anybody?
Pickup repairs.
Repairs, truck, repair.
Supplies used.
How much was the truck repair?
I'm on a different book.
$250. Okay, supplies we said?
There's miscellaneous supplies used, or there's gas, oil, lubrication. Would that be?
Let's go with the miscellaneous supplies.
And it says used. Is that
Yes.
$80?
$80. And then you said gas,
Oil, lubrication.
gas, oil, and etc.
$940.
$940. What else?
Mower repair.
Mower repair.
That's $110.
Continue.
As helper, is that the payroll?
Yeah, let's call that payroll or wages.
Wages, okay. $5,400.
Okay.
We have payroll taxes, let's see, $190.
That seems awfully low for the payroll taxes, but
The next one was confusing for me. It's payment for assistance in preparing payroll tax forms. Is that an expense? Is that
CPA.
yeah, well, not necessarily a CPA, but they went out and paid it, tax prep.
Okay. That one was $25. Pretty cheap.
Tax preparation, $25.
Yeah.
Okay, question, stop right there. Warning lights should be going off in everybody's head. Who is going to sit through 16 weeks of listening to me go on and on and on and only earn $25? None of you, right? None of you. Good?
Maybe there's a mom too.
Yeah, maybe it's her mom.
And then the next one's insurance.
Insurance.
That's $125.
Okay.
Telephone,
Te-
$110.
telephone. Go on.
The next one that says on $2,565 to pay off the note, including interest, on August 31st.
Okay, we borrowed money. When we pay it back, is it an expense? Cash leaves. Is it an expense? When we borrowed the money and we got it from the bank, was it income to us? Was it revenue? No. So when you pay it back, it's not an expense. It's an asset and liability that goes over on your balance sheet. Okay? So we borrowed $2,500. We have to pay back $2,565. What's the difference? What is that $65? Interest. The bank charged us a fee for using their money. So we're going to put interest as an expense down here. But it's only the $65, okay? Okay. What's next? Anybody? We have depreciation, right? Because she says the value of the truck that she used up. How much is that? $600. So here's what she's saying. This is a really simple owner's estimate of depreciation. She went out and bought a truck. It was how much money? $2,500 or something? $1,500. So she used it all summer long, and she goes, well, I think I can sell it for about $900. So think of it in those terms. I paid $1,500. I could sell it for $900. How much of its value did I use up? I used up $600. That's what the depreciation expense represents. That's not how anyone calculates it, but it's what we're doing here in a simple example. Okay? All right. Are there other expenses we need to recognize? Yes?
She owes $180 for gas and oil.
Okay. So the $180 that she owes, does this say that she paid $940 for gas and oil?
Yeah, in the beginning.
In the beginning. So we have to add $180 to this, don't we? Right? So $940 plus $180 is how much? $1,120. Good catch. Thank you very much.
You would just add it in there, you wouldn't put it in a different category or anything like that?
Well, it would go into this category here, so I'm adding it in. Are there other expenses? Anything we've forgotten? Okay, so if I add all these up, or if someone did it for me, what number would you tell me it totals?
Looks like it should be $8,000 and $8,075. But I could.
Does everyone agree that it's $8,075?
Yeah.
Yeah.
Okay, total expenses are $8,075. And so if you take revenue minus total expenses, you get?
$4,925.
$4,925. And what is that in words?
Net income.
Net income. So, revenue, you saw how we figured that out. Listed all of our expenses. We had to adjust for a couple of things, like the money that she owes. We had to pick up the depreciation and the interest expense. Total expenses subtracted from revenue gives us net income. Did she make money or did she lose money? She made money. That's a good thing. Okay? Everybody follow what I did here?
Yeah.
Yes? Any questions? Yes, sir.
Why did we add certain things if we were going to get them later? Why didn't we, omit those and then report them later?
Under generally accepted accounting principles, we want to match the expense with in the same accounting period where it generated revenue. So we recorded all the revenue up here. People owe us money. We did the work now. They owe it to us. We've earned it. So we included all the revenue, including the receivables up here. And all of these expenses, including the $180 in gas that we haven't paid yet, was part of what it cost to make that happen. That's the matching principle under GAAP. Okay? It's called accrual accounting. Anytime you're dealing with accounts receivable and accounts payable, you're in accrual accounting. Good? Okay. So we have some assets left at the end. And in that paragraph, they tell us all kinds of stuff. Let's go through and list off all the assets. What's first?
Truck.
We have a truck. And how much did we pay for the truck?
$1,500.
Okay, $1,500. But wait, we recorded depreciation over here because we said it's really only worth $900, right? You always record the asset at its original cost. Always, always, always. And then we're going to record the depreciation with it less, and I'm going to abbreviate, accumulated depreciation. Okay? So we show the world the asset and its accumulated depreciation. You can look at someone's balance sheet and know if their assets are pretty new or pretty used up. Yes, sir?
Do you want to put both less and the brackets?
Makes a good point.
It's an excellent point. Technically, it's one or the other. Better? Okay. All right. Other questions? All right. What other assets do we have? We had the truck. I brought over the depreciation just because we already know it's there. What else does it tell us we have?
Mowers, trimmers, and tools.
Okay. We have mowers. Are they all listed together as one item?
Yes.
And how much did she say that was worth?
Some of it.
What did we pay? We paid $900 for this. Okay. What's the next asset? Anybody? How much money do we have in the bank? We need to have some cash.
Borrow 3,000 cash. By signing a note payable.
Okay.
You guys have different numbers.
Hang on. Under liabilities, we borrowed some money. So we have a note payable. And we borrowed how much in the 7th version of the book? $2,500. Okay. What else does it tell us?
There's interest.
There's interest plus interest. We recorded that as the interest expense over here. Okay. So we're good. What else? Let me look. Excellent. She got it. We paid this note, didn't we? It tells us in the problem that we paid the $2,565. So this we've already paid off, and the balance is actually 0 at the end. Does everyone see that? All right, let me walk through this real quick. Plus interest, blah, 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 $2,500 in cash. Telephone, I'm still working my way through the expenses. A notebook, plus some bills. $700 for lawn services. People owe us $700. We got that. AR 700. We owe $180 for gas on a credit card. So we have, let's call it an accounts payable for $180. Okay. Somebody said something while I was reading through that?
I think they were telling you that.
Okay. Okay. Good. It doesn't say we have anything else, does it? So this doesn't belong. Everybody follow me so far?
Can you explain one more time how that was paid?
Yeah, I'm just crossing it off. It says bank deposits, collections. The following checks had been written. $2,500 and $6,500 to pay off the note, including interest. So she borrowed the money during the year, but it's been paid off. So at the end, its balance is zero.
Okay.
Okay? Does it tell us how much cash she has? Anywhere? Where? Where?
Bank deposits of collections from customers total.
Doesn't say how much she started with.
12,000. Oh, I don't know about what she started with.
Let's assume she borrowed all the money. The worst that can happen is this won't balance, right? So we had $12,300 in cash. Cash came in of $12,300. And we wrote all of these checks, or did we?
Because the gas is.
Right. So we wrote $940 here, so there's a $180 difference. Plus we wrote the $2,500 payment back to the bank, right? When we paid off the note? But I have the 65 here, so I'm just adapting. So I have 8075 minus 180, because we haven't paid that $180 accounts payable yet, correct? So help me with the math. What?
78.95.
Okay, but we also wrote the $2,500 check. So we wrote $10,395 in checks. Subtract, and how much cash would we have left? 12,300 minus 10,395. 1,905. Yes? Good? Everybody see how I came up with that? I admit I did it quickly, so ask. So she has $1,905. Think about it. We just made an assumption that she started this company with none of her own money. She borrowed $2,500 from the bank. She paid the bank back, and she still has $1,905 plus a truck and a lawnmower and some other stuff. She did all right. Yeah? That works. So I think this is everything. Total assets. Can somebody add that up for me? Everyone agrees it's 4,105? There is a 5 in there.
I have 5,605. Yeah.
What?
I also have 5,605.
5,605. Seems to be the consensus, yes? Okay. So accounts payable is $180. Stockholders' equity must be how much? 5,605 minus 180. Correct? So how much must it be?
5425.
5425. Which gives me total liabilities and stockholders' equity of 5605. And I'm in balance.
Putting owner's equity, not stockholders, because it's a sole proprietorship.
I know.
Okay.
I'm just trying to not confuse everybody who's learning this for the first time. So we calculated this. We don't have it. It's not given in the problem, but we could kind of back into it, right? And it balances. So is everybody good with what we just went through? Okay. Yes, sir.
Could you just explain one more time that little addition thing you did there to get the cash?
Okay. I took all the expenses, and I know that $180 of this I haven't paid yet. So to convert it to cash, I subtracted that from the total. Then I know I wrote a check for $2,500 that isn't in here to pay off the note, so I added that, and that's how much cash I spent. That's how I got cash payments. Okay, so for those of you who are A students from previous classes, everybody's good with this, right? Everybody's good with this, right?
Yes.
But it's wrong.
Well, it was weird because the stockholders' equity, I mean, we
Okay.
didn't have anything over there.
That's,
We just kind of made that.
notice, we created an income statement and a balance sheet from a paragraph where somebody rattled on about, hey, I started this lawnmower business and I made some money, right? We did awesome here. So let's give ourselves a big round of applause and say, yes, we did awesome, because this is good. Now, this is a made-up problem, and no one thought we would ever go this far with it, or at least the authors of the book didn't, but we did, because we're good accountants, right? So notice there's 4 basic financial statements. Income statement, statement of stockholders' equity, balance sheet, and a statement of cash flows. We did 2 of them, income statement and a balance sheet. Statement of stockholders' equity. Okay? So I'm going to erase here. A statement of stockholders' equity is what we're missing. And here's how you'll see that this isn't right. Beginning equity. How much was it at the beginning? 0, because she started this company, right? 0. How much money did she put in? We made an assumption that she put in 0, correct? We did that when we calculated the cash balance. So what's the next thing that you add? Net income. Did she take any money out? 0. So our ending equity should be $49.25. They don't match. You guys see it? That's a problem. It's a matter of the data we were given in the book, because they didn't think we'd ever go and do this with it. But we did, because I like taking things and teaching you guys a little bit more with it, right? But I want to point out that it doesn't really work. Even though we could create an income statement and a balance sheet. Good? Okay, questions on it? All right, we've eaten up a ton of time doing that. Ton of time. Other questions on any of the homework at all? Anything? If you guys could take that much data and do the two statements with it, income statement and a balance sheet at this point, I would be thrilled. I'd do cartwheels. I would fall over this and kill myself, but I would be thrilled. All right, no other questions? All right. Let's go learn something new.